Morning, friends. So, welcome to my video on GenAI for long-term investing. In the last video, we discussed or we had a exhaustive video covering a big prompt to do a complete multi-dimensional financial statement analysis and gather inferences. That is ultimate, which I can say, where you analyze on multiple factors: financial, qualitative, management quality, capital allocation skills, so on. Please check that video and then come back to this video. This shall be a little simpler version or a stripped down version of whatever we saw in the last video. For somebody who is a beginner or somebody who wants only the basic ratios first before getting into the details, can go for this prompt. So let me walk you through this prompt. It's basically ratio analysis, nothing more. It's basically ratio analysis. So here I am telling, like, I have completely fed the formula, but there are different type of ratios like liquidity, solvency ratios, profitability ratios, all that. All those ratios I have put the formula so that you can pick up the right numbers from the statement. This is something a bit unconventional, but I prefer this ratio and a comparison over time to see how the company is improving in terms of holding the inventory days, the payable days, and finally the cash conversion cycle. So this may not be a common use, but I prefer it, so I have added it here. And then completely comes the cash flow ratios. Finally, I'm telling the output requirements. So what is the different constraints or rules it must follow to share the output. So we will just key in this prompt, and by the way, this file will be uploaded in my blog page once in a month with all these prompts, which you can download and modify and use if you require, or otherwise you can use it as it is. So right now I'm going to put it in ChatGPT and upload the financial statements for Carborundum Universal financial statements. Ah, okay, it is uploaded. So now let me run it. So basically, I always prefer to verify whatever is being calculated. So I ask to pick up the numbers and put it so that I can cross verify a few random numbers in the financial statements to ensure that the right numbers have been picked up. So now it is putting up the ratio analysis for the last year, which are is last or the latest financial year in the financial statements. First comes the liquidity ratios. Each of this line will have some inferences, like what does cash ratio mean? It has around 63% of current liabilities it holds as cash. Then solvency ratios, debt ratio, interest coverage ratio. In interest coverage ratio, it is extremely high. Company comfortably covers interest cost. So it means extremely high is not a flag, means the interest is very low. The interest, the below portion, the denominator is very low. That's why the number appears to be large. Then profitability ratio, how the company performs, ROE, ROE, everything. You have all the profitability ratios. Then efficiency ratios, how good it is turning over its inventory, fixed assets, and so on. So those are here, right? Efficiency ratios. I think I should have added the fixed assets turnover ratio. One is total assets, another is should be fixed assets, which I will update the prompt and before uploading in the blog page. Then this is cash conversion cycle, which I told you is a favorite of mine. So they have shown how they have calculated it. 365 days divided by the number of times the inventory is turned over. So 139 days. So all this is calculated and it is shown here how the number is arrived. So the cash conversion cycle from the time it pays for the inventory to the time the company gets back the money from its suppliers, it's around 109 days. Okay. Then cash flow ratios. How do I use this 109 days? Is compare it over a period of time as well as compare it with the nearest competitor to see how efficient they are. Then comes the cash flow ratios. So operating cash flow ratio, like CFO divided by current liabilities, free cash flow, cash return on assets, then OCF to PBT ratio. This determines how much of the profit that is shown in the P&L statement is really converted to cash. Okay, so then dividend coverage ratio, dividend by CFO, how much times of dividend is uh, paid from the in this thing. Cash flow from operations. Cash flow from operations is the real money mind you that. Okay, so it's a conservative payment. Only 0.7 or 17% of the CFO is used to pay the dividend. So it says that there is ample room for reinvestment, in which case it might be reinvesting in growth. Okay, so now we'll see a slightly different case, that is the Gensol financial statements, and I'll be putting the same prompt. So for Gensol, I'm sure many of you know what is currently going on and the issues behind the company. So that purposely I have picked up this Gensol company. Okay, short-term liquidity slightly above the benchmark of 1.2. Then solvency ratios, debt to equity is highly leveraged. Means loan is 4 times the equity base. Then interest payment, weak buffer for interest payments and risky. If you remember the last carburetor we saw, it can comfortably pay, and here it says it's weak buffer and risky. Profitability ratios, couple of margins are healthy, whereas ROE, strong return for shareholders despite low net margin. Then comes cash conversion cycle. It takes around 1 month to get the cash from the time it pays for the inventory till getting back from its vendors. Then the different cash flow ratios. The operating cash flow of this company was negative, so many of these ratios are shown to be negative with the inference which should alarm you, like negative company failed to cover liabilities from operations, negative free cash flow. So if there is negative free cash flow and still there is growth or capex, then it must be borrowing heavily, which is substantiated by the 4.4 times the borrowings what we saw in this ratio. So you need to relate between ratios to gather inferences. So with this, we complete this prompting for creating financial ratios using 3 financial statements. In the next video, I'll take you through an interesting topic on financial forensics, or how good are the numbers and a part of management quality. So till then, bye friends.